Welcome to Opening Bid. I'm Yahoo Finance Executive Editor Brian Sozzi. Now let's make some money and get a lot smarter. And I think we're going to do that in this episode per the usual, but definitely this one. Here with me now is Wind Shift Capital founder Bill Blain. Bill, always, you've really never been on with us, so good to see you for the first time. Longtime follower of what you write over, the Morning Porridge newsletter or blog. Definitely an avid follower of that. And what recently caught my attention, a couple weeks ago, I saw one of your writings. I wouldn't say you were calling the top, but you voiced a lot of concern on where the market was. And a couple weeks later, now many stocks are in the tank. So my first question to you is, what did you see a couple weeks ago that got you worried?
Well, I've been concerned for a long time that the market was still massively overbought on a mood that interest rates were going to fall massively. And that is something that changed so long ago, yet the market still believes it. If we get interest rate cuts, they're going to be minimal. It was also clear that we had issues in the adoption of AI in ways that would actually change the world as we had been promised it would be. And it became clear that AI is going to change the world, but just much slower and much more expensively than we thought. And then on top of that, you've got all the rising political uncertainty. And I mean by that domestic political uncertainty, where unlikely as it sounds, the UK is the most stable democracy suddenly in the West after years of Tory infighting. And we have all the problems still to come in the US. And then, of course, you've got on top of that conflict in Ukraine, Israel, Hezbollah, and the whole new relationship with China and how that changes global supply chains. So put all these together, and it's been looking for a while that we were going to reach a crescendo at some stage. And yeah, I was lucky. I sort of called it a few weeks ago that we are getting to the top, and so it proved. But I don't think we're set for a massive crash, just a whole series of nervous considerations.
Well, it's good to toot your own horn, Bill. I'll do it for you, because not many people have the courage to go out there and make a contrarian call, which brings me to this. Is it hard to hit publish on something that you write that you know is going to be contrarian? Does it scare the hell out of you, even though you've been doing this for a long time, just knowing that you might be wrong? Does that give you pause sometimes?
Oh, no, I actually think that having going out and saying something you fundamentally believe in, and people calling you up as you're, telling you that you're wrong, that's actually a great thing. So it's a chance to speak to them. There's nothing better than calling one of my clients and getting told, Blain, you're an idiot, because that is the beginning of the dialogue. And not only will I understand what their perspective is, but they might get a better idea of mine, and that will inform what I do in the future. So I'm not in the least bit afraid. I remember getting into terrible trouble years ago on another well-known US financial news channel when it said, so Bill, when do you think the crash is going to happen? And I think I said something 11:15 on October the 8th. And they went, wow, that's kind of exact. Says, I don't know, but I've said something. It just so happened that day there was a correction, and suddenly
Now you're the hero. Now you keep coming on. They keep asking you on because you drive those big clicks, Bill. I mean, that's why you're here on Yahoo Finance.
No, I mean, what you've got to do is there's no point in just saying what everyone else is saying, but not really thinking. And I think one of the problems in financial markets today is 90% of the research and analytics that is sent round the market is written by compliance officers to be read by compliance officers. The guys that I read are the guys who have an opinion and they have insights to back it up with. Everyone's got an opinion. They're like mouths. Everyone's got one. But it's the guys who can actually put an argument round that. They're the people I go out and read.
You know what's interesting? During this latest sell-off, Bill, so my week started. The first story I read, of course, on Yahoo Finance. We aggregate a lot of content from around the universe. A story about calling this latest sell-off a panic, and I just clicked out of the article. I'm like, what are these guys talking about? This is not a panic in the markets. We don't have people lining up outside of the banks. Do you think Do you think we're in some form of short-term panic here?
No, not at all. I think people were surprised at just how quickly the Japan's situation escalated. You know, when you get a move like that in yen, that's a massive, massive 8 times standard deviation type move. It's the kind of thing that gets people surprised. But I think there's a clear difference between what's happening this time and what we see in a crash. Typically, when you have a correction, as we've just seen, that's because a whole series of known unknowns have come together. In my experience, and gosh, you can tell by the color of my hair, I've had quite a bit of it. Um, Crashes occur when it's one of the no-seeums, a black swan, an unknown unknown that suddenly emerges, that you suddenly work out, wow, all the banks are bust. That's what caused the crisis in 2008. Whereas this was a whole bunch of things that, okay, they've all come together, and that's why the market's gone down.
I tend to agree with you, Bill. I think these folks, and we've started, they come out of the woodworks in days and weeks, like we've been seeing in the markets, calling for crashes. I just think they're dopes. So you don't see a crash. That's good. But do you see the conditions for a bear market?
I'll tell you what I do see, and I think there's going to be a reassessment. There's going to be bear and bull markets because you're going to have split fundamentals. What I think is really occurring now, and the catalyst for this has been an outbreak of common sense in the AI expectations, is people are going to start looking very long and hard at their investments, and they're going to say, you know what, does this really make sense? And there is one example that I would cite as a clear one where there's going to be a reassessment, and that's Tesla. For years, people have gone along with the sort of the Cathy Wood outlook that this is worth trillions because it's the best battery company. It's got self-driving robo-taxis, and they'll go along with all the showmanship and outright fairground barkerism of Elon Musk. But I think now people are going to have a more sober reassessment. And that's bad news for firms that aren't delivering or firms that are over promising and under delivering. So I think there's going to be a lashback there. At the same time, I think the investors are going to look and say, well, look, what are the real fundamental strengths of this economy, which is not nearly as bad as the doomsters think. And these are the kind of stocks where they're producing great protected non-compete type incomes or turnaround stories. And one of the stories that I'm following at the moment in turnaround, and it's only a possibility because it's not certain yet, are names like Boeing, where Boeing has had, the worst decade possible, but is finally beginning to look like it's going to elevate itself off worst company in the world status. And if that happens, I can see definite upside there because you know what? Everyone is still going to want to fly.
I was going to wait, Bill, to talk about individual stocks towards the other side of this, but you brought up two good ones, so I'm going to slice them in half here. Let's start with Tesla, because you just mentioned Tesla. I had a guest on Opening Bid a couple of days ago. Tesla retail investor, very passionate person, does a lot of research. Appreciate her for coming on. She made I think, a pretty compelling case for Tesla stock to reach up to $10,000 a share over the long term. Now, Tesla's shares down 20% over the past month. Stock's at about $200. What do you think when you see calls like that?
Oh, yeah. My first thought is, can I have a quarter ounce of whatever she's smoking? I mean,
I
look,
mean,
I live in
so
the
you don't see
UK.
it.
We have,
So you don't see it. I mean, that's not even a possibility.
I mean, look, yeah, it's the world would have to fundamentally change in ways that we cannot possibly understand for that to be realistically possible. Look, here's the thing. I live in the UK and I have to get a train into London every morning. The train works on a single line from my station to Waterloo. It's a single line where trains go up and down it. Now, they cannot make that work. They have not been able to make it work for nearly 200 years, the signaling problems. They have some of the finest minds in the world trying to make that one line piece of railway actually work, but it doesn't. So, how are you going to get self-driving really work. All you need to do is look at the way in which the camera system that Tesla is using is under pressure. You have to look at the other companies that are still struggling with other approaches. And you got to conclude that until we get real general intelligence from machines, not artificial intelligence, which is just crunching numbers, it ain't going to happen. That means that robotaxis and full self-driving are not going to be delivered. Now, I may be wrong. Maybe there will be a technological miracle that makes that happen. And if the facts change, I will change my mind. So therefore, I have to look at what the reality with Tesla is today, which is it's a car company. It sells electric vehicles in a very competitive market where margins are falling. And guess what? Demand is falling today. Parked in the Yacht Club car park this weekend, I saw one of these new Chinese Tesla copies. I think it's called a BDY. I don't think they're selling them in the States. But you know what? It's a prettier car than a Tesla, and it costs 1/3 the cost. So that's why I'm negative Tesla.
I appreciate that level-headed analysis. Hang with us, Bill. We're going to go off for a quick break. Don't go anywhere. Lots more to talk about. All right, welcome back to Opening Bid. Having a really cool conversation here with Wind Shift Capital founder Bill Blain, of course, also the author, longtime author of Morning Porridge. Is it a blog or a newsletter? I just want to make sure I have it right, Bill.
I don't really know. It's a kind of a bloggy sort of newsletter. It goes out every morning. It's designed to be in people's desks by 8:30. I've been writing it for 15 years, since the global financial crisis, when I was trying to explain to my clients why they should sell me all their bank stocks, which they did. And it just sort of taken off. So it's now a very, well, not terribly, but a particularly glossy little website. And for £10 a month, which I think is it's not that many dollars, you get an article every morning, which is full of my useless opinions, but occasionally a couple of diamonds of insights.
Well, let's stay on those diamonds, Bill. Let's close the loop on that Tesla conversation we were just having. So, what if you're rightly skeptical of really big price targets on Tesla? I get it. What if former President Trump wins the White House, pulls the $7,500 tax credit for EVs here in the United States? How big a risk is that to a business like Tesla?
That's an interesting one. My own view is that if Trump gets in, he's going to be far better advised. He's going to have a much better team of people round about him. And the kind of big shifts that we're expecting are simply not going to happen, because whatever we think about Trump, he's smart enough, as long as it sounds like his idea, to accept other people's ideas. So I don't think we need to worry about things changing too much. But it does kind of, sum up the contradiction at the center of US politics from our perspective here in Europe, that you've got a president that has announced that he's into oil and gas and supports autos, but then his greatest supporter is Trump. And you read stories about Trump now feels that he has to go with that. I'm going to hold any judgment out on that until we see what happens in the market, which I know sounds like a bit of a cop-out because the election now looks much closer. But I suspect that when the election happens, the last thing we're going to be worrying about is Trump and Tesla.
Do you view one candidate, Harris or Trump, as better for stocks?
I don't think it would be right for me as a rabid Scotsman to be commentating on the choices that America faces in terms of who's the better politician that people should be voting for. But I certainly think there are issues that the electorate should be thinking about in terms of what the likely economic outcomes are. Now, Trump is going to be positive for the economy in some ways, that he's going to keep his tax rates very low, but that means he's going to borrow. And keeping the 2017 tax cuts means that the Treasury deficit, which passed through 35 trillion this morning, is going to continue expanding at a faster rate. Now, that is potentially very dangerous for the dollar, and it's very dangerous for the bond market, we have this expression that we call the virtuous sovereign trinity. And the basis of that, very simply put, is that an economy that has a stable currency, a sustainable bond market, and political competency will tend to do very well. Now, at the moment, the US very much has that. But if any of them fall by the wayside, if the dollar becomes increasingly unstable and we see de-dollarization as a result of the election, or we have a massive crisis in the bond market because of the increasing scale of the US deficit, that's when you run into problems. And of course, in the UK, we're very familiar with political incompetency following Premier Liz Truss, who lasted slightly less time than a lettuce on a shop shelf.
I like how you just slid in a little Liz Truss there analysis. Well, I mean, you mentioned
You can't resist talking about Liz Truss. She is just the gift that keeps on giving to analysts who are
you,
looking for examples of political incompetency. Ask me any question about political incompetency. The answer is always Liz Truss.
fair enough. You mentioned you don't necessarily really want to weigh in on U.S. politics. So let a person in the U.S. perhaps pick your brain. What is the state of the UK economy? What are you seeing? What are you hearing? And how might the UK economy impact the US economy and US markets over the next 12 months?
That is a very interesting question indeed. I mean, the UK, strangely enough, I made the joke earlier that suddenly the UK probably finds itself with a very stable political democracy. But the UK has a whole series of issues that we need to confront. And there are a couple of really major ones that we need to solve in order for the economy to get working on. And one of the major ones is housing. In London, rents and the cost of housing are completely beyond the affordability of most workers. The average house in London, the average two-bed flat in London, is something like £650,000, whereas average salaries are somewhere in the region of £60,000 for two people together. So they just cannot get in the housing ladder. Rentals are now well over 60% of disposable income, which means no one's got anything left to consume. And if the economy isn't consuming, then it can hardly grow. And this is a problem that's going to take a long time to address. You've also got all the infrastructure problems that haven't been addressed over the last 14 years. So there's an awful lot of rebuilding to be done. And the government response to that is we have got to be really careful on spending. We're going to have austerity cuts so that we cut back on spending to get the economy functioning again. Well, there is an argument to be said that if we started spending money and involved the private sector to finance it, we could actually create a virtuous growth cycle by spending money on house building and rebuilding infrastructure. But at the moment, because of Liz Truss, yeah, I got it in back again. Because of Liz Truss, we're terrified of any unfunding spending commitments.
Sounds like Bill. It sounds a little bit like what we're dealing with in New York City, where $6,000 gets you a closet and 10 roommates.
Yeah, I think it's even worse in London now. You look at some of the houses that are up for sale, and you just think, oh, forget it. I mean, I'm very fortunate. I left London a few years ago because my passion is sailing and moved to the south coast. But then I have to face that railway line I was talking about. It used to be an hour, it's now days. But I mean, if you compare and contrast the UK to the US, at the moment, you'd have to be mad not to be invested in the US. The US has had one of the strongest performing economies for the last 4 years. We've had corporates doing very well indeed. And it's only now that we're really beginning to get the first signs of, I wouldn't call it even a recession, I would just call it a slowdown. Because it's not yet terribly serious. When it becomes serious is when consumers have no money left to consume. And the other thing to consider is that the strength of the US economy is it's not so dependent on external supply lines. It is by and large an internalized economy, whereas in Europe, we are extremely vulnerable to supply chains. And everything in economics really boils down to it's not demand, forget classical economics. It's all about what there is available to buy, supply being the critical thing. And that's where Europe's vulnerable.
Bill, let's go back to some stock, good old-fashioned stock talk here. You mentioned, I want to end this ultimately on tech because a lot of interest in all things tech stocks here at Yahoo Finance. But you mentioned Boeing as a turnaround story. New CEO that just got in there. Should investors trust a company like Boeing? Given all the challenges it has been up against, the financials have really taken a dive here. What do they need to do, I guess, to repair investor trust?
Okay, so I have been profoundly negative on Boeing for a long time, even before the MAX disasters. And the reason for that is I watched what had been the finest manufacturing company in the world. If it ain't Boeing, I ain't going. They built the best airliners. And I watched that company getting taken over by McDonnell Douglas using Boeing's money, as the jokes go, and a whole bunch of cost accountants replacing engineers. And so it became a company run on the basis of financialization. That was to maximize the stock price, which incidentally maximized the returns to the management suite as well, who paid themselves enormous bonuses through stock options and stuff. And became clear that this was no longer a company of engineering brilliance, but a company run by accountants. Then we had the crisis with the MAX, which they tried to wriggle out with. It's now clear they've squandered all their money on stock buybacks. They don't have the cash to develop a new plane, but they are finally understanding the importance of their genetic history, that it's safety and quality that counts. So I would look at Boeing and say, okay, do I trust them? Not quite. Is it a good time to have a small look at them and maybe a small bet on them? Perhaps. It's a stock that's worth watching. I want to see what the new CEO does. I want to see how he prioritizes the shop floor and how he puts the priority back on safety and quality. And I want to hear plans for the expansion of the business. What are they going to build and how are they going to get it done?
Bill, in the minute that I have left, out of all the Magnificent Seven stocks that have sold off, all these names are generally off their 52-week highs. Which would you back up the truck on, and why?
Oh gosh. If you'd asked me that last week, I probably would have said Apple because I'm an Appleholic. But when Warren Buffett turned around and dumped the stock, I said, he must know something I don't. Out of the whole lot of them, which is the one I'd go for? Gosh, at the moment, I've got to say it'd probably be Facebook because the business of advertising is massive. And about 75% of advertising goes through the internet. And the firm that controls that best at the moment is Facebook. Do I think Facebook will survive the evolution in advertising that is constantly going on? No, they will be replaced. But in the short term, Facebook would be my call.
Hell of a chat here, mate. Really enjoyed this one. Windshift Capital founder Bill Blain. Give his bloggy newsletter a read, Morning Porridge. Really something that I've been reading for quite some time. Very much enjoy it. Bill Blain, good to see you. We'll talk to you soon.
A real pleasure. Thank you.
And that's it for the latest episode of Opening Bid.